Good morning, everyone. Welcome to today's ad-free live stream. We're starting 2 minutes late because I had to take my kids to school and they were running a little bit behind. It's the worst part. When you start relying on your kids to be on time, it doesn't work very well. Anyway, if you're here for the first time, I'm glad that you're here. My name is Tyler. I'm going to be helping navigating you through the wild world of day trading futures. It's in the car. And we're going to go ahead and get started here in a second. But if you are watching for the first time or you're watching after the stream, you can use the chapter markers below. You can use the chapter markers below the stream where you can jump to the key moments where I've taken all the trades that I've taken. Typically, it's only going to be 1 or 2 trades, most likely. That's all that we're really looking for. We're going to refrain from over trading, impulsive trading. We're going to be patient. We're going to wait for those A++ setups, and we're going to capitalize on those. Let's go ahead, open in prayer, and then we'll go ahead and get started. Father, we honor you this morning. We thank you for the opportunity to trade. Lord, I just thank you that you are good and you're faithful. And Lord, that even in the midst of this day trading journey, you're teaching us about you and your kingdom. Father, may we understand you even more. We honor you in our efforts this morning in Jesus' name. Amen. Okay, folks, lastly, if you're looking to take your trading to the next level, or you are like, you know what, I don't want to use my own capital. I'm tired of losing money of my own money, and I want to have a little less risk. You can use the code DTJ, and Apex right now is giving a 80% off discount to their Apex evaluation account. So you can get a 25K account for $29 and a 50K account for $33. With that, let's go ahead and check out the charts. Ted, man, I was just setting up everything and that nice breaker was forming. That's how it works, isn't it? We're looking at the 5-minute right now. We got 10 minutes. Let's jump up to the daily. All right, so here's my initial impression. I'm looking for price to run lower today. I want to see Friday's equilibrium tagged. We have yet to tag that level, and it is my primary objective this morning. That is what I'm looking for. Jumping to the 4-hour, we've swept liquidity here in this candle, and we are in the 6 a.m. to 10 a.m. candle. We are looking for a 15-minute retracement into a 15-minute fair value gap. And we've passed this one. And let's see if we reach up into this one here this morning. We'll see if we actually get up there. If we do, this would be the 15-minute fair value gap. Dropping down to the 1-hour. The 1-hour, we have a sweep of liquidity right here. We'll see if we close inside of this range in the next 40 minutes. And then we would look for the next candle, the 10 a.m. candle, to start displacing lower. On the 30-minute, same concept. We have a sweep of liquidity here and here. We'll see where the next 30 minutes this candle closes. It will close in the next 9 minutes. For the 15-minute, we have this low resistance liquidity here, a 15-minute fair value gap here and here. 5-minute, we have a BPR right here, nice little breaker. This is what Ted was talking about, I'm assuming, for the upside right there. Dropping down to the 1-minute, let's see if that breaker actually played out. So we have our little breaker here, displacement. We came back down into the breaker right there and launched higher. So everything played out there. We still have London low. Here, I've already marked our new day opening gap. This blue dashed lines sitting right here, those are the new day opening gaps. I'm going to remove the 21st new day opening gap. We don't need that. And we will keep the 317 new week opening gap. We'll keep that on there for right now. But targets are going to be this green line down here. That's really what I want. That is what I want to have happen. I'm going to go ahead and get my Ninja copier all set up here. There we go. And then, let's see here. We got 7 minutes. How's everybody doing this morning? How was everybody's week? Do we have a good week? I would say overall it was good. We had some decent setups. I had a little bit of a debacle yesterday. Quite disappointing with my my trade copier. I closed my trade and it didn't close the other trades, and I went negative like $700. Was able to work that back down to was able to work that back to what was it, a $200 loss. So I was grateful for that, but still can't have that kind of stuff happen all the time, man. Adversity comes. How we handle that adversity, though, is everything. Okay, I think I'm pretty much set up here. Hope everything's working smoothly here. Run London high, I think, then run for Friday's equilibrium, Ted. Fill the opening range gap. 930 model looks good. Yeah, we're looking for a bullish 930 model here this morning. We'll see if it wants to find support maybe somewhere around here or here in the next 5 minutes. Nikki, good morning. Doing good. I'm glad I found your channel yesterday. I'm transitioning. Yes. Hey, I saw your comment. I commented back. Glad you're here. Welcome. Ted, doing okay? Doing a revenge trade. Trying to get back out of some drawdown. I tell you what, that right there is the hardest thing. I've had that happen. Even recently, I've had that issue. It's frustrating when you make progress and then you're like, oh, you're not content with the progress that you made and you want to just get a little bit more. That greed just gives you, it doesn't allow you to see the charts clearly. Let's put it this way. Greed causes you to misread the markets. Greed clouds your judgment. Greed puts a veil over your eyes. So you're not able to really effectively read price action with clarity because you're only thinking about making more money. So you're looking and you're wanting to find a setup instead of letting the setups come to you. So I know this, I get this, but it's when you reach that point of no return, it's like you've zoomed in, you're like focused, you tune out everything else. And it's like you're past that point of no return. Is no bueno. A lot of mistakes can happen when you reach that. So being able to identify that is really, really important. Brady, good morning. Tyler, can you explain how commissions work? What should I expect to pay in commissions trading at 10 micros on my XPEX trade? Think of it this way. It's going to be built into your profits. So whatever you've seen is in your profit as what you made, that's with commissions already taken out. So commissions, I think on micros are like 45 cents, it's 35 cents one way. So you're going to pay 70 cents to buy and sell that contract. So you're going to pay $1. 1 tick is $2. 1 tick is 25 cents, I think. Yeah. No. 50 cents? Yeah, I think. I'll have to think about it. My head's kind of thinking about the market right now. So let's go ahead. We got 3 minutes till market opens here. We've swept liquidity here and we're moving back lower. Here's our opening range gap right now. Here's the thing, Ted, I don't think if we're going to look like this, I don't know if I'm going to take the 930 model because I think it's going to run for this aggressively. I think this is the final target. So if anything, I want to mark out my opportunity for a trade prior to the open because I think we may get that aggressive. I think we may have an aggressive drop. So I want to be ready for that. MR, good morning. Thoughts on the tariffs? I think the tariffs are going to cause the economy to have some chaos. I think this is a breaker right here, by the way. $9.29, we got 39 seconds. I could see this selling off right here. I'm not going to take the 930 model. This is right at a breaker. I'm not going to take that. Honestly, I think we could sell off right here. Honestly, I might just put this here and see if it actually goes. No. So there, let's see if it goes right here. Okay, really didn't go anywhere right at 930, so in either way, I wasn't really interested in that. We have structure for the move to move lower. That's really what I would like to see. If we get a fair value gap on this first candle or the second candle, I may look at taking this inversion to the downside to this London low and move stop at break even. Maybe take some profit and then hold for a bigger move. That's 20 points to the London low there from right here. Victor. I don't know what you mean by the elephant bar down. This is what I'm looking for right now.
Order submitted. Order submitted.
I'm going to take an entry here. See if we want to expand lower right now. Technically, stop loss should be up here. Giving it room to breathe. $19,790. is the target. I'm going to close. Oh, dang it. I don't know if it's going to go. We're letting it play out here. My initial target's going to be London low at 845 right here. Come on. Hit it. There it is. All right, so target 1's hit. Stops at break even for the rest of the trade. And I'm going to hold till 790. There's a chance for a reaction here. We could reject right here. I'm expecting it potentially to, with it being London low. But if it wants to go, I just wanted to be in it. All right, so canceled there at break even. Hit my initial target for our inversion model that we took right there to the downside to London lows. So now what we're going to do is wait for a clear and obvious setup that tells me we want to move lower. Now, it could just continue and sell off right now, and if it does sell off, unfortunately, I just got stopped out. So I'm not going to be able to participate in that unless I have a clear, obvious entry again. Now, what I could have done is not move my stop to break even and kept it up here, but that stop loss for something like that is 22 handles, and I just didn't want to do that. Ted should run at least to the London low. We got that. Yep. Nice move. 40 handers. 40 points, 40 handles. Way to go, Ted. I don't know what that was from this entry to that low. It was 15 handles. So I got 15 handles on that trade. Ted, do you think this is going to act like a breaker right there? Or do you think this is going to act like a breaker? I think this could act like your breaker right there. If we reject this and we start selling off from right here, we could, and we get below this and create an order block right here, I would be interested in taking a short right around the London low. But the problem with going, I just don't know how big they want to make this retracement. Do we want to go all the way up to the previous day low? Do we want to start filling in the new day opening gap, or excuse me, the opening range gap right here? Do we want to fill that? We absolutely could. Here's an inversion to the upside right there. Based on the aggression, this actually is not a bad trade. 14 seconds left. No close. This trade is invalid once we hit that high, which we just did. So no more trade opportunity with this inversion. That really did look good. It's a single fair value gap. This is my inversion model that I teach. When I say the originator for this model was Dodgy D. If you want to watch his content, he teaches this. And I really like it. And I've been trading it for quite a while. So we'll see how it swept that high and is closing inside, or it's respecting this fair value gap. So let's put that back up there. So let's see how it respects this. Okay, so it closed inside this fair value gap. We're still watching. We have another small fair value gap here. Is this? No, no, no. This is our first fair value gap right here. First fair value gap. Let's see if we find and respect that, or if we are able to close below it. Yeah, it is, Ted. We've seen smaller ones though, haven't we? I think we've seen smaller ones. Yeah. Jay Honky, what's up? Hello, sir. Good morning. Glad to have you. All caps is totally fine. If you want to get my attention, all caps doesn't quite do it. If you really, really want to get my attention, that what do they call it? The super stickers, the super chats. That's how people really get my attention. Doesn't happen very often, and I really don't expect people just to drop money in a chat. Why? I don't get it exactly. But I'm grateful when people have. All right, so for those that are joining that don't know, this green line is the target. That is what we're looking for. We are wanting to take a trade to that level right there. We're just waiting for something to give us a clear opportunity for it. Has Midnight Open been tagged? Midnight Open's been tagged. The new day opening gap has been tagged. We just got the opening range gap that we have right now. LJ, what's up, my friend? Trinidad? Woo! What time is it there? I have no concept of what time it would be. Northern, good morning. Is that 9:40 a.m. or 9:40 p.m., LJ? Ooh, dang. 9:40 in the Philippines. Okay, I didn't know. Trinidad, I didn't know where that was. Okay, interesting. So you're New York time. This is going to sound embarrassing. I don't know where Trinidad is. It's in the Caribbeans. Aha. That's the kind of trading that I want to do. Oh my gosh. Right there, folks. I want to be there. So it's right off the coast of South America, just north of Venezuela. Oh man, that sounds nice. I mean, I'm not complaining about the weather here in Nebraska right now because it's beautiful outside, but to be on a beach, that sounds like the way to trade. You know, I'm going to have to figure that out. If I'm going to travel more, which I do want to do, what kind of setup do I need? I'm going to have to like carry my whole setup. or I'm just going to have to buy a new one. Ted, no snow. It's hot right now. It's beautiful. It's beautiful. I'm enjoying the weather right now. Hit the like button, guys, if you're appreciating the commentary. If you were able to participate or you were able to see that trade to the London lows. Not very often do we take a quick trade like that. Mostly we're sitting and waiting for price to start formulating, give us an idea where it wants to go. I mean, look at the flash of that candle. Are we going to participate in that? Heck no. No, don't ever get jealous on a big candle thinking, oh, I could have been a part of that. No, you could have had your money taken from you if you were a part of that. More often than not, people lose money on candles like that. Well, let's get out. Okay, here we go. Let's go back to the charts. All right, so we have a mitigation block overlapping with London low, or excuse me, with previous day low right here. Okay, so previous day low is right here. This is a great reaction. I'm really liking that reaction. I'm watching this first fair value gap for a continuation lower. Mitigation block rejected there. Let's see what happens around this first fair value gap. And do we have news? Friday morning, we had news at 7 a.m. and we have news at 10 a.m. So we do have consumer sentiment, orange folder news at 10 o'clock here in 15 minutes. All right, so we got a new 15-minute candle. Let's check out the 15-minute time frame. All right, so we haven't swept this high. We swept this high here. We inverted this small 15-minute fair value gap, but ran London lows and closed inside of this up-closed candle. So this 15-minute candle isn't telling us much other than it may want to move back higher. It's not an expansion candle. It closed inside the range, so it has permission to turn back and run the other way. It doesn't mean it's going to do that. It just doesn't tell us like with confidence that we're just running lower. Okay. 30-minute. We got 15 minutes left on that. 15 minutes left on this. 5-minute. We swept this liquidity right here, or we filled this volume inbound or this fair value gap on the 5-minute. Swept liquidity. Yeah, I'm still looking for that lower price movement. J Bass, what's up? How you doing? No good fair value gaps right now. Nope. I mean, the first fair value gap closing below it is not bad. To me, it's not the best. It's not horrible, but it's not the best. I just don't like it. It just doesn't feel good. You know what I'm saying? To be honest, price just looks like it wants to go lower. I mean, I can't take anything long. Nothing looks good for longs. And here's the main reason. The main reason why is this candle right here. This candle right there did all of the damage and swept all the liquidity during 2 a.m. 2 a.m. it swept the highs and then expanded lower. So my guess is whatever we see in London, we'll see in New York. So I want to see an expansion in New York session because we saw it in London. That's not a hard, fast rule. But when you got clear price action like this, it takes the reason to move higher out of the equation. Then it's like, okay, I want to run lower. When is that opportunity going to be? That's kind of what I'm looking for. I still think if it wanted, it could reach up to the midpoint of the opening range gap, the yellow box that we see right there. That's possible. That's for sure doable. And then as far as Friday's range goes, here's that low. And then we could see it run these equal lows. So let's jump to the 15-minute. It's a big 15-minute fair value gap here. So let's mark that out. What does the hourly look like? Hourly's covered. Four hour is covered. Daily. We're going to put this in there. If it wants to reach lower, it could reach for the consequent encroachment of the daily wick from Friday, March 21st. Still, that's inside that 15-minute fair value gap, so that makes sense. It makes sense for that to be a possibility. Nothing in here that we want, guys. Look how the first fair value gap was respected with this wick, these candles right here. That makes it much more intriguing for a downside move, to be honest. Relatively equal highs are, yeah, that's a possibility. It's just not probable at the moment. If we run this first fair value gap, I'm saying we're running these lows, and there's a good chance we're running down here. Especially if it happens in the next 20 minutes. I'm not jumping in. I'm going to wait. I just hope this doesn't just expand right now. Okay, there's the close. I'm going to take an entry here. 790 is going to be my target. Don't close green on me. That's going to get stopped out here, folks.
Order canceled.
Didn't hit the target down on the downside, so I can't. I'm not going to take more than a 20 handle loss. So the fair value gap that we're watching is right here. So let's see how this first fair value gap closes. Does it close above this, or do we close below it? That's really what we're watching for. The trade is officially violated if we close above it. If it closes below it, I just was unwilling to take that large of a loss if it closes above it. So 20 handles is my max. So see how it looks like it's going to close below now?
Order submitted.
This is my last shot. It respected it, and I just was unwilling to take that big loss. If I take a loss here, I'm going to be done on the day. I really want it to hit. I really want to take the trade that gets to 790. But I technically don't need that. I'm not going to take a loss after that. We swept an internal low. So it needs to, if it's going to go higher, I'll get back in later. But I'm going to move my stop to break even just to protect. Drop. Come on. Go lower. Stop flirting with it. Dang it.
Canceled.
Right now I want it to just run higher. I just want it to run higher for me, please. Make me feel better. I could have sold that trade for 20 handles. I didn't. I know. I know. Opportunity was there. This just looks too good to the downside.
Order submitted.
All right. Re-entering. Last shot. Yeah, I think the news is what's going to propel it down here. That's why I'm okay with taking it beforehand.
Order canceled.
I can't let that go against me when we get a flash like that. It did not hit and reach where I wanted it to. It gave me a lot, but didn't hit my target, so no trade. Or let me rephrase that, we're stopped at break even. So it did what I wanted it to do, it just didn't hit my target at 790. Are we still going to respect the first fair value gap here? Man, I feel like I'm chasing by trying to take this trade three times. I'm going to let it play out without me. I feel like if I do it again, I'm going to chase it. I don't want to chase. I mean, everything in the market is showing lower, right? And that's why I was willing to take that trade prior to news, because I felt like it could be the flash that got us down there. It was. It just didn't reach where I wanted it to reach to. I mean, it flashed us 40 points. I mean, I could have sold that. I just it didn't hit my level. I need a close below London low, and if we get a close below this order block, I may look at some type of entry. Let's look at the 60-minute. All right, so this would give us a 5-minute entry at 10 o'clock. So what's a 5-minute entry? Do we have a 5-minute anywhere? No 5 minutes. 30-minute. Do we got a 3-minute? Between 9:30 and now? Yeah, we hit that over here. Look at the bodies on the 30-minute, all staying above London. No, this is 3-minute. See you, Northern. There's no more structure. I don't have any more structure. I can't confidently take a trade based on my models because there's nothing here. There's nothing there for me to take. I can't. If at this point I'm taking the trade solely off of speculation and older targets or older levels. Mitigation, inversion, fair value gap. But we swept the low down here and closed in it. So this inversion is technically closed. There is no more inversion. So now it's literally just speculation if I enter a trade that it's going to run this low. So I can't, in my right mind, how many times do we not trade in our right mind? So I understand that it's very easy to take these trades and just think that it's going to go there and we want it to go there, but then it goes in the other direction. But in my right mind, I can't take a trade because I don't have a model to support it. So I'm not going to take it. That means if it runs without me and hits that level, hey, that's all right. There's going to be another trade that's going to give me the points that I want. Now, I missed probably a total of 70 handles this morning by not closing the trades that gave me 10 to 20 handles, even that 40 handle trade right there. So it's a matter of now just being patient. Alex the Potter, you read the market like a sneaky purchase agreement. That's a real estate term. A real estate purchase agreement. It's probably going to run down to that low though. So what we can do is I'm not opposed. If you look at previous charts of the 930, or you look at the previous charts of running towards this level, you typically get some type of reaction from it. So I'm not opposed to potentially taking a long once we hit this level to see if we can get 10 to 20 handles. And I'm probably going to try it. Let's see if it gives us 10 handles here or 20 handles. Right off that reaction of the midpoint. And I'm going to give it a second. It needs to go up right now. If it doesn't, I'm going to close it in a loss. All right, I'm going to close it. It didn't give it to me. It still has a potential to react to it. I just like the initial reaction. So if it's not going to give it to me right away, I'm going to close the trade. Well, we called it, folks. We called this level. There's the midpoint of that wick right here. Let's see if it respects it or if it's going to push lower. If we're going to push lower, we have previous week lows sitting down here. That's what we'll look for. If we're going to continue to push lower, that's our next target. $19,602. Yeah, that's the level. Nice job, JB. $9.51. Yeah. I think those I think there's measuring gaps beforehand. I think it takes a lot of I haven't mastered measuring gaps or breakaway gaps. I haven't mastered them yet. Because you don't know if you measured correctly until after the move. I'd rather measure the manipulation leg, and one standard deviation is right here. I'm bummed that didn't, because of my tight stop loss requirement, I'm a little bummed that I didn't let this play out. That's an area of growth for me, is learning to let just the even after a big candle like this, if you're seeing this being respected, letting price and placing your stop above here and just letting price play out and sitting in it. I'm not good at sitting in my trades. It is the weakest. It is probably one of the weakest areas of my trading, which overlaps with patience, right? I'm exercising patience, waiting for the perfect setup, which I've gotten significantly better at. But sitting in a trade, like we first got in right here at 952. 952 is when we got in. Our biggest drawdown was 21 handles. We got stopped out at 20 handles, and it ticked us out. So I set my stop at 20 handles. That's where I normally set it. So I got ticked out by that by 5 ticks from where I got in. If I didn't get stopped out there, I would have been able to hold it through here, at least to the London low. Or no, we've already tagged that. So we would have had to hit it here. Sitting in these trades right here is definitely the area that if I'm going to get better at, I have to consciously say, I'm going to sit in this trade so that I can mentally and emotionally prepare for that back and forth. Because if I emotionally prepare myself, it's like, okay, whatever happens, happens. I'm going to just let it do it. So it is an area of my trading that I know that I need to improve on. The fruits of the Spirit, yes. Faith, self-control, and patience. This morning I talked about, I was in my quiet time. That's basically what I was talking about. I'm like, all right, Lord, thank you that you've given me patience, self-control, and contentment. And I will be patient. And I would say I was patient waiting for the trade that I wanted. But I wasn't patient in sitting in the trade. I wasn't patient sitting in the trade. And at this point, I'm like, I'm not going to chase it. I'm not going to chase it. I'll get another setup. There'll be another trade opportunity that I can take. %, Alex. That's awesome, JB. I'm glad that it's been helping out. I sent you a message in the Discord. If you don't mind, there's a testimonies spot in there. If you don't mind just writing a little message on your experience and how it's been helpful, that would be grateful. I get people that ask about the Purpose Driven Trader Academy, and just how that, and just the commentary that I provide here. And people ask if I have any testimonies. And my response for the most part is, well, considering it takes, 2 years for, really it should take about 2 years for people to be profitable. The reality is I probably won't have any big testimonies for at least 2 years, right? That's the truth. But people's experience in that journey is a little bit different. You said you put a question in there. I'll check it out. Right now, we're just waiting, guys. We already have received the expansion. So since we've received the expansion, I have to wait for some type of retracement to see what price wants to do. Now, if I want to play to this low, I can take this first fair value gap and say, all right, well, I want to see if we respect this first fair value gap that we already wicked into, the most recent fair value gap, and then take your entry based off of that and see if we get the continuation. Then you would set your stop up here, and then you see if you get that continuation. My only problem with that is my timing on these types of entries have historically been very bad. It's why I normally don't take it, because I could have done this one here and it would have worked out. I could have done this one here and it looks as if it was working out. But sometimes you'll get that first one and then it runs against you. So my timing just hasn't been off. There's an element to my understanding of these that I'm missing. So I just don't take them as much. 15 minute. I wanted to see if we swept the lows yet. So we haven't swept that low. Let's mark that. JB, to answer your question, well, you can do two things. One, just your initial experience right now would be grateful. I do, and I've shared this with a few different people, and I've gotten things in different ways. But I recently started the testimonial to start putting things in there. But just your experience so far, and then if things change down the road or you're seeing that consistency, then 100%. But I will tell you that a lot of the consistency is going to be more about you and your patience. It's going to be more about you and your understanding of how your emotions respond to trades. And if it's doing great right now, take note of how you're emotionally feeling, how you're experiencing your trade setups, because that's going to be the biggest part of your trading successes. I can't teach you patience. I can't teach you how to wait for a different trade. I can't do that. Ted, did this play out like your 30-minute and 3-minute model suggest? I don't think we got a 3-minute entry. The 3-minute entry was way up here though. This was our 3-minute entry based on the 30-minute model. It was right there. I just wasn't going to take that. It was right there. And let's see, I'll show you. Sorry, it wasn't there, it was right here. So 3-minute on the 30-minute model worked out. It was just right here. And you would have had to sit in that for quite a while as well. Again, the weakest part of my trading is sitting in those trades. All right, so here's that swing low that I marked on the charts. I'm going to remove the execution screen because we're not taking any trades right now. So right there was a swing low, and it looks like we got a decent reaction from that. It gave us a 15 handle let's see, 79 to 98, 19 handles, a 19 handle reaction from that swing low. Ted, in regards to the hourly gave me a sweep here. So 1, 2. So this would be the candle right here. Let's see if but at 10 o'clock, do we have a 5-minute fair value gap for an entry after 10? After 10 o'clock, we have not received a 5-minute entry. So the 1 hour wouldn't have played out. Now, it doesn't mean it can't. The 1 hour we may still get a 5-minute entry. This could be our 5-minute entry right here. But the question you have to ask yourself is, do we have further downside? And I think the possibility is we have further downside. So you could use this as a potential entry. The only thing I don't like about it, that I'm not a fan about it, is when you look at this swing high to swing low, equilibrium is way up here. And typically when we get a big retracement, I like to see equilibrium tagged. So that's kind of what I'm looking at, is if I want to see a continuation lower, I want to see the retracement up to here. Yes, you get smaller retracements on the initial leg lower, but once we start hitting key levels and price starts, doing its thing, going back and forth, this is a key. The equilibrium is the signature in price that says, okay, I think we've gone high enough. Let's start looking for that short. Unless we are just aggressively dropping and it doesn't give us that at all and it just keeps running lower and lower. Those are harder for me to trade. Again, that's the exact same thing I shared earlier, is that trade entry would have been right here and right here. Playing those continuations aren't my favorite thing to do. Lesson for me in my journaling that I will be journaling today is learning to be patient, not just for the entry, but patient for price to follow through. If there's no reason for me to get out, then I need to stay in the trade. Now, technically, according to my inversion model, that would have been the point I would have need to move my stop to break even, and I would have been stopped out at break even. So for my inversion model, I would have been stopped out at break even following my rules. Understanding that we had a lower target, that's where the subjective call comes in on, do I want to follow my rules systematically, or do I keep my stop loss where it was and allow the trade to play out towards that higher time frame target that I'm confident that we're going to run towards? That's the part of trading that is a little subjective, because you have your rules. My rule is once we hit that swing low, my stop is at break even. So my trade would have looked something like this. 20 handle stop loss. Or technically, the stop loss is a close above that inversion or that first fair value gap. We don't get that. So stop loss isn't hit. Target to move your stop to break even is that swing low, which is 21 handles. So as soon as we hit that at the 10 o'clock candle, I need to move my stop to break even, and I would have been stopped out. That's my rules for my inversion model. That's my rules for the inversion model. We're still selling off here, folks. I have it on another screen. There's just no entry for me to get in this. Once we hit this previous week low, I will take a long, most likely. When we hit that previous week low, and that is, what level was that? 602.25. I'll look at taking a long. But going back, just talking about my analysis here, my inversion model I would have gotten stopped out. Unless I subjectively said, you know what, I'm going to let this play out and keep my stop loss at a close above that inversion. When I have subjective decisions, that's when it becomes difficult for me, because do I want to? Do I think? What do I think? Am I second guessing myself? Am I wrong? Am I right? That's the benefit of having a systematic trading model. When it violates the model, you close the trade. When you have to make a subjective decision, it's easy to second guess yourself. That's why when my default is having a 20 handle stop loss. That's my default. So I don't have to subjectively think about, do I need to move this? Do I change it? It's a 20 handle stop loss, period. 20 handles, if I get stopped out, I get stopped out. That's why I got in this trade 3 times. Because it stopped me out 20 handles for the first time, moved my stop to break even the second time, and then move my stop to break even the third time after the news candle. Because I wasn't going to let a 40-point winner turn into a 20 handle loss. Difficult scenario to work out, but it's important to talk through it and know how to handle it for the next time. Yeah, you could do that. I've five micros is kind of my thing right now. Is where I've been sitting at. I've gotten comfortable with 5 micros. 20 handles makes it a $200 loss, and I'm okay with losing $200. Ted, just out of curiosity, when you measure the opening range, do you include the 10 a.m. candle when you look for possible projections? No. I won't include the wicks on news candles for the most part. I normally ignore them. Let me rephrase that. I normally end up ignoring them, but I'll measure it with it and without it and find out which one looks better. Brady, what's up? Hey, Tyler, why does the bar move faster on TradingView versus TradingView? Current price? Yes. It's the coding of how it delivers price within that program. So if you were to go on like Webull doesn't have a lot of fluctuations in price as much because it will show, it like smooths out the candle. I don't like that. Maybe TradingView registers price every half a second. Every half a second it's moving it based on the price. TradingView might be every quarter of a second. Might be faster. It's just as soon as it's delivering. Sometimes the jittery of TradingView bothers me more than TradingView, but I appreciate how reactive it is. For the style of trading that we trade, it should not affect your trading. In fact, I probably wouldn't want to be looking at all of the jitters up and down. TradingView still gives us those big wicks and big candle movements when we're seeing the candle movements. So it's still there. It's just what you prefer. They both. I've noticed that too. I've seen it, but it's really how it delivers. There was a setting I had to change on. I think it was Thinkorswim. I started trading options on Thinkorswim, and Thinkorswim had an option to present candles as soon as it was delivered, because apparently they waited. There was a delay so that it removed some of that fluctuation in price, that jitteriness or the, schizophrenic look it has. All right, so we're about to hit this previous week low. I am going to take a long once we hit that low after seeing how it reacts here. Don't give it to me before. Diane, I feel you. I understand. When you're in profit, it's like you don't want to allow it. I've gotten to the point when I have only 1 micro left, I'll hold to the target. But it's when I have multiple contracts that I just haven't built when I have 5 to 10 micros. I just haven't built that muscle to allow it to hold it longer. I'll execute on TradingView if I'm using evals, because I can do typically on an evaluation account. I don't do micros, I do minis. I executed on TradingView yesterday for an eval account that I passed, and I was doing mini contracts instead of micros. So I'll do both. I started out with TradingView, and then I moved more of my executions to TradeOvate because I like the bracketing order, and I know that you can do that on TradingView, but I just got comfortable with TradeOvate. So these green candles right before this previous day low does not make me excited about taking a trade once we hit that level, a turtle soup style of trade. I would have rather seen 1, 2, 3 big black candles and then hit that level and then get a reaction. But when we consolidate above, it makes me cautious about an expansion through that level. So we're going to wait and see how we react to that level and not just take it initially. Cyrus, I did see your message. Putting your stop loss based on the size, I totally get that. And making stops appropriate.
Order submitted.
All right, let's see if we react here. That's what I was afraid of, is that expansion lower.
Order canceled.
All right, that's going to be it for today, folks. That didn't execute the way I wanted. I'm not going to take another trade on my accounts. There's the level that we ran. Yeah, we're going to call it a day early today. I have to actually do some cooking. So I'm going to do a little bit of cooking here. And see if maybe something comes up this afternoon. So you guys have a blessed day. Thanks for being here. Thanks for hanging out. We'll be back Monday morning, 9:15, hanging out. God bless. Stay safe. Good trading. And we'll see you all Monday. God bless.